Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again at euro currency. So this week we've got a lot of important events. Payrolls report, European Central Bank meeting, Jerome Powell statement, superb rally on the gold market. So lots of stuff for discussing. So I have tried actually to make the weekly report as short as possible, but unfortunately once again it has appeared to be rather extended because well, really a lot of questions that we need to consider to stay informed with the events on the financial markets. So and I have tried just to pay attention to most important moments in all three topics: payrolls, Powell report, and actually what's going on right now in minds of the investors. So if we just briefly observe the headlines and recent analysis, you could sometimes find opinions rather contradictory. So once one bulk of traders wait for rate cut in June, others suggest that will be no rate cut. Market is floating in one side to another. It's some kind of the ping pong trying to reaction on any event. So it seems that data that has been released actually it seems that just market authorities trying to make investors to lose direction at all, any sense of the direction. So now many people just do not know what to do and what to expect. And a bright example is the recent payrolls report. I already was kidding last time that take a look that every time statistics authorities revised and payrolls to the downside in next month, it was just a joke, but in reality it seems to be truth. And I just have no words to describe the situation. It's just absolutely madness. So people has made some trades a month ago on the January numbers, right? That was superb, and now they are revised these numbers to the downside, not just a bit, but for 120,000. I would say, who will pay those who make the loss in January when the data has been released? So it seems that, well, it's a really bad tendency in currently in the statistics that we see, not only in the payrolls but in inflation and other stuff. So speaking about Jerome Powell statement, we could acknowledge that he was more confident this time, and we think that there is some political background exists behind it. We will consider it tomorrow in our gold market report. So in this report we have taken a look at a few statements from the Christine Lagarde and Jerome Powell that were mostly unsigned in the mass media, but we think that they have the vital importance for the markets. Trying to just find some reason in all this mess that we have currently in the news, in the reports and so on, we have to say that we have to stay on our course, on our trading plan, in our view. We should not flow in one direction or another. So we just have to believe the numbers. And from that standpoint, we suggest that it's too early to speak about reversal on the Forex, on the euro currency. Currently, we still treat this rally that we have as a temporal, so some pullback. And we still do not see some kind of the breaking moment for domination United States dollar. We do not see that this point has been passed already. So that makes us to keep our long-term view still valid, that dollar should dominate in the nearest few months upon the euro currency. So, and we correspondingly look at this in the current market performance. So let's take a look at the daily chart. We have superb ABCD pattern, but right now we have in place the Gartner's triple to sell pattern, which probably will become the major background for trading on next week. As you know, our minimum target of this pattern is usually triggers retracement and is 30% of the whole pattern's body. So it's somewhere around 61 rate, 65 area. Pattern has been formed right at the 618 level, 109.70. That's actually what we have discussed and what we have traded in the recent few weeks. So in general, the recent 2-3 weeks was positive to us. So all stops that we were considering has worked pretty nice. So first moment that I have to warn you about is the weekly chart. If you take a look at the weekly chart on euro currency, you could recognize here the grabber. But in reality, if you take a look at the Chicago Mercantile Exchange futures, you will see that actually we do not have any grabber. And we do not have the same grabber on dollar index as well. So that's why for now we have to ignore it, and maybe it will appear next week, we do not know, but this week this is not working pattern to us. Moving down to the full time frame chart, you could see that the OP target briefly has not been tested. So just a few pips stands up until the OP, while the dollar index has completed it. Friday performance was really great. So we see acceleration, we say downward retracement, market should keep going higher to the OP. OP just was not totally completed. Second moment that I have to warn you about, this is bullish grabber on the fall time frame chart. Once again, you do not see it on retail brokers, but if you'll take a look on the futures, you will see that it exists right here. When you do not have any tops to the left, it means that you have to use as a target the top of the same candle, of the grabber's candle, which in turn means that here we have to consider that the OP could be touched on the next week. So in general, the performance around this area will be most tricky when the market's coming to the OP target. On the hourly chart, I do not see something really special. Yes, we have here some bearish pattern. In general, it will be okay to forming here the hand shores that we could try to trade to the downside on the intraday charts. But existence of the uncompleted OP brings the additional risk. So from that standpoint, as a bottom line of the current analysis, on the technical analysis on euro currency, first is we do not consider any new long position. Of course, you can try to make the scalp trade hoping that market will complete the OP based on the grabber that we have from the fall time frame chart. This is not forbidden, you could do this. But mostly, since market stands around major resistance and flirting around, it's a very small potential to this target. And that's why we currently do not consider new longs on the daily chart. Second, for a bearish trade on the intraday charts, we can't make the bearish trade on the daily just because daily context is bullish. On the daily, any retracement we treat as a dip to buy by far. But on the intraday charts, where context very soon might be bearish, we could consider taking the short position, aiming on the same 1.60 area, minimum target of the daily regardless cheaper to sell. So here as you have only one option, either to wait for a clear pattern, which we think is our preferable scenario. For example, it might be hand shoulders or whatever pattern will be formed once the OP will be completed. That just carries small risk for trading. Or you could take more risk, for instance, and you could just take the short position somewhere in this area with just placing stop above the OP. Above OP for some distance, 15-20 pips maybe. Hoping that since this major target, and if market will start reversal, some reaction on this target, it should not move too far above it. So both of these ways have additional advantages and disadvantages. Second scenario, as a first scenario with the pattern, it is more reliable just because you will have the pattern that confirms reversal, and probably you will be able to place tight stop, just for example above the shoulder of the hand shoulders pattern, something. Second way to act, advantages is simplicity. So you just place stop above the OP and do not bother with these fluctuations, what will happen around. So that's a very personal decision, as I always talk about this, and you could make your choice by yourself. So that being said, no new longs, waiting for confirmation of the reversal, waiting for CPI numbers next week, which will be very important for the United States, and let's see what will happen.